Botra from on the technicals, and from the research we are joined by Rajesh Agarwal, who's the head of research, AUM Capital. Hi, good morning to both of you. Thank you so much for joining us today. I'll come to you first, Rajesh. This question is for you. This is John writing from Chennai. He says that he is a long-term investor and he wants to enter Tata Chemicals, either Tata Chemicals or Rallis India. Which one is a better pick for a long-term perspective?
Morning, everybody. One is Tata Chemical, and what was the other one you said?
Yeah. Rajesh.
Rallis India, right?
Yeah.
Okay. So I think both belonging to the same group have same sort of corporate governance and all. And as far as fundamentals are concerned, I think Tata Chemical being larger on a size and is a diversified play on chemicals, fertilizer, and other things, and the kind of correction which we have witnessed in the recent past gives a credit above Rallis. So I would go with Tata Chemicals. Soda ash prices are stabilizing, I would say, with the kind of demand going up. I think better days going ahead. This time results was not that good, but still for one quarter result, we should not consider the kind of companies Tata Chemical is. So for a long-term view, maybe for a 12 to 18 months, one can expect a return of around 15 to 18% in that period. So yes, it's a buy from our side, Tata Chemicals.
Coming in on Tata Chemicals as well as Rallis. Good morning, this is Snehi also joining in. Kunal, next query coming for you from our viewer Satya, who's writing to us from Kerala. He holds M&M Finance since the last few months. He bought this stock at a buy price of 310 rupees. Now he's saying M&M itself has come to 2,770. Is it worth shifting from M&M Finance to M&M itself? And his time frame for this query is 1 to 2 years. That's his outlook in the future. Would you recommend this trade?
So I would recommend to hold on to M&M Finance as of now. M&M, yes, of course, it's been one of the formidable names, and it makes a lot of sense to have allocation towards large cap stocks, especially. But it looks like that M&M, I think, is going through a first phase of a correction, because I think just recently, last 2-3 days back, the stock has managed to break below its 200-day moving average. So that could maybe invite some bit of further selling for M&M. M&M Finance, on the other hand, the stock comes back into a zone where just recently the stock had been breaking past above its long-term averages. There was very good volume accumulation for M&M Finance. The sector and many of the stocks, or the few stocks in the larger cap names, have started to look attractive. So I would probably believe that whenever the market gets back into its own feet and then comes back into a rally mode, you would probably expect stocks like M&M Finance to start getting back into a stronger degree of outperformance as well as a rally mode.
All right, that's the technical view on M&M Financials. But coming to you then, Rajesh, this is Vijay, who's writing in about Coal India. He wants to make a fresh investment in Coal India for the long term, but he's looking purely from a dividend perspective, is what he says. He feels that he wants your take on whether he should stick to Coal India from a dividends perspective, or can he look at any other growth stock for better prospects?
See, on both counts, be it dividend or be it fundamentals, Coal India stands out. It also dividend yield that's around 7% odd at this point of time. And that's a very good dividend play, I would say. And kind of company it is called the largest coal reserves across the world, doing very well. Coal demand going up with the kind of thermal power demand going up, we think coal is going to do well. So moreover, they are diversifying into other fields also. So Coal India is a very good buy for a long term. One can continue for maybe 12 to 18 months for capital appreciation, and even for dividend yield for 7-8% dividend yield, it's a good buy.
Strong view coming in on Coal India, recommended to be a good buy from Rajesh. Kunal, coming to you, next query coming in from our viewer Lakshmi from Hyderabad, writing to us about the stock in question here is Swiggy. She holds 40 shares of Swiggy at a buy price of 430 rupees per share. She's saying she's a long-term investor and can afford to hold the stock for more than 2 years. Should she continue to hold? What's your view?
See, of course, the chart history is limited for Swiggy, so wouldn't be able to extrapolate it to such a kind of a long-term time frame. But yeah, in the last 7-8 weeks, even this stock has seen a sharp sell-off. We've seen the stock correcting from, I think, 600 rupees thereabouts towards 300, 330 where it's trading right now. So it's almost like a 45 to 50% correction for a stock like Swiggy. Now, maybe over the near term, the stock may come back into an oversold territory on the charts. But just looking at the way the stock is structured, it's generally better to try and wait out for a phase where the stock confirms a bounce back and then show signs of credible reversal. That could happen maybe if once the stock crosses levels of 360, 370 yet again. So I would suggest that just wait out for maybe over the very near term a revival. Let the stock come back above the 360 mark, sustain above those levels for a couple of days. That's where you can probably try to look at maybe averaging out Swiggy.
All right, that's a technical view on Swiggy. But Rajesh, this is Shankar who's writing from Chennai. He's writing on Canara Bank. He says that he has 500 shares of Canara Bank that he bought at 104 rupees per share. He feels he wants to know if this is the right time for to start averaging in, because Canara Bank, it hasn't really done much in the last 1 odd year. It hasn't really performed. It has been in a corrective phase. So now he feels, should he start averaging in on Canara Bank?
See, it's not only Canara Bank, but the entire banking space has underperformed. If you look at Bank Nifty, it has highly underperformed the index. So and we have a feeling that unless until Bank Nifty starts performing, the market is not going to perform. And as far as Canara Bank is concerned, I think it's one of the good banks in PSU space, doing very well. Asset quality has been stable. The balance sheet has been cleaned up. Even the advances and the deposits have grown on a stable space, stable rate, I would say. One can go long on Canara Bank, but again, I would say that banking as a space is not performing at this point of time. One should have a long-term view, maybe 12 to 18 months down the line. Then only you can have a meaningful return. It's a buy from my side, but you have to have a longer-term horizon.
Outlook coming in on Canara Bank from Rajesh, a conditional buy coming in. Kunal, coming to you, the next stock is something we don't very frequently discuss on this show. In fact, it's a very rare query coming in. It's coming in from our viewer Siddharth from Kolkata. He holds 50 shares of NIIT Learning. That's the stock in question right now. And his buy price is 459 rupees per share. If I'm not mistaken, that stock is somewhere around 450. Yeah, the stock is around 450. So slight bit of a loss is what he's seeing on his holding. He's asking if we should continue to hold or switch to some other stock from NIIT Learning. What's your view?
I've not been tracking the stock, Sneha, so I'll give it a skip.
Okay, so let's skip this one, and next query coming in. Kunal, we'll come back to you. The stock in question is NTPC. It seems to be a viewer favorite because everybody is talking about this stock. NTPC, this viewer is Sudhir from Hyderabad, who's purchased this stock 3,000 quantity at 305 rupees per share with a target of 3 months period. So very short-term outlook. Kunal, would you be able to help us with that?
Yeah, so I think NTPC is something which I would recommend as a buy or even a hold at current levels. So what you can do is, I think at current levels of 300 thereabouts, it seems like that the pace of selling for the stock is abating. Recently, I think in the month of January, first half of January, the stock had formed a low of 296. From there, it rallied towards 340 mark, and now it's getting back into the retest of the 300 to 96 levels. In this case of the retest towards the 300 mark, the volumes have dropped down, as well as there seems to be a potential, very slowing down of the downtrend for NTPC. So maybe the stock should hold on to that 296 kind of a support point. So I think closer to 300 levels is, I would believe, could be a good buying territory from a long-term play.
All right, NTPC, a good play for a long-term perspective. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Hi there, welcome back to Buy Now, Sell Now. Let's keep addressing all your viewer queries. Viewers, keep writing to us on the number that's flashing on top of your screen. We have Kunal Bothra back with us on the technicals and Rajesh Agarwal back on the fundamentals. Rajesh, coming to you, next query is coming in from our viewer who's not written his name, but the query is about Brigade Enterprises, 100 shares at 1,450 rupees per share is a buy price. He's asking if it is a good hold, if it's a good time to continue to hold this or time now to sell this.
It's not a time to sell because, as we all know, the markets have been in a bad place for a pretty good long period of time. And more of the stock has got a cut. Brigade, as it is doing very well in the real estate market. Bangalore is doing very well. They have good projects in hand. So it's not a time to sell, I would say. Rather, one can add at this point of time, somebody has a long-term horizon and a risk appetite which can digest the daily fluctuations. If you can't take risk, continue to hold, sell around 1,150 to 1,100 odd rupees, maybe in the next 6 to 9 months.
All right, that's the view coming in on Brigade Enterprise. Kunal, this question is for you. R. Ganesh is writing from Bangalore. He's asking you if this is the right time to buy M&M and ICICI Bank. He wants to hold it for a period of approximately 5 years. But, if you could give a perspective on, is it the right buying time for these two counters, and what are the levels that he can watch out for?
No, I think you should wait for these stocks to be at least getting into a zone of bottoming out. Yes, they've been very strong performers in the previous leg of the market trend. Undoubtedly, I think these are strong leaders. But then I think on price front, we need to see some bit of confirmation where these stocks may come back into a recovery as well as a reversal mode. For example, this is almost like the fifth or the sixth consecutive session on the downside for a stock like M&M, and it's fallen from 3,000 plus levels towards 2,700, 2,800 levels where it's trading right now. So which means that the selling intensity is increasing for M&M. Maybe over the near term you might see a further drop into the stock price, but if not, I think it's better to buy this when the stock confirms a reversal as well as a breakout on the upside. So both of these names, good buys from long term play, but maybe timing wise I would suggest just wait out for maybe a short term period. Once these stocks show signs of a breakout of the previous say 3-day 4-day swing highs, that could be a very good point where you will have to start timing as well as buying these stocks.
Okay, so buy what, but wait for a bit before you buy is the call coming in from Kunal. Rajesh, coming to you for a next query is written to us by Raghu Raman, a viewer from Trichy, and the question is 15 shares of Adani Ports at 1,500 rupees per share, what he holds, along with 10 shares of Axis Bank at a buy price of 1,250 rupees. Should he hold or exit? Could you please advise?
Sorry. Both are a hack from my side. Taking one by one, Adani Port is a strong play on logistics. They have a big capacity on logistic business. Ports are doing well. The kind of correction it has faced, almost 30-40%, even more from the upside, gives a very good opportunity to long-term investors to accumulate. As far as Axis Bank is concerned, the numbers have been almost as per expectations. Going forward to with the kind of pickup which we have seen in their deposits and advances are going to do well. The only concerns were on the NIM's front, but that was for the entire industry as such. And once the rates cut starts happening, that has already happened in the last RBI meet, I think things are going to do well. So Axis Bank and Adani Ports both are a buy from our side.
All right, that's the view on fundamentals. But coming to you now, Kunal, this is Nikhil Sharma who's writing from Mumbai. He says that he's an intraday trader and also a short-term trader. He says that he had sold shares of L&T and ITC Hotels yesterday to book losses, but now he wants to know when is the right time to get in again. Either that or should he look for something else? What would be your advice, Kunal?
I think as a strategy, what you need to see is that there are two things which we look out for when you're looking to go for a long strategy or a buy strategy. Is that first is let the market stabilize, because that initial hour of selling pressure which which we see in the markets on a daily basis, that keeps the traders at least who are looking to carry forward positions on a bit of tender hooks, because when the markets open with such kind of a sharp gap down, not on the indices front but on the stock specific front, there is a lot of selling pressure which the markets have to mitigate throughout the day. So then after the first hour of selling, you're just left with the repair work which is supposed to be done throughout the rest of the session. The second, the most important part is we look out for confirmations of strong leadership stocks within the sector. So if there are few stocks which emerge as leaders from their respective pack, that makes that should be made to your initial list of buying. For example, L&T right now is not one of the leader stocks as such. The stock is still into a drag. I think just about last week or so the stock had broken below 3,400 levels, and now it's on the verge of break below the 3,200 mark as well. So a stock which has been falling with respect to the overall market, it's always better to buy leadership stocks as well as stocks which are outperforming. Right now L&T doesn't fit into that bill.
Okay, so avoid coming in on L&T from Kunal. Rajesh, coming to you, our viewer Parag Visaria is writing to us from Mumbai and he's asking for your view on Nalco. Just a simple view, what are you making of this company at present? Rajesh? Rajesh, your view on Nalco, if you would like to share? Okay, I believe we have a bit of a technical error with technical glitch on that front. Kunal, coming to you, your view on Nalco. What is Nalco looking like on the charts? Is it attractive for a fresh buy right now?
See, price-wise, the stock could be attractive. I think from 260 as a high for Nalco in 2024, the stock has come back towards 175, and that's a very sharpish kind of a correction of 30-35%. But there are two things which you have to remember. That one is that the stock is very high beta. It comes from the space where we've seen commodity stocks overall being very sharp, very volatile, and they swing with a span of maybe few weeks, few months by a margin of 10, 15, 20% also. So you have to be a bit cognizant of this kind of a development within the space or the entire sector. But Nalco, I think at closer to 175, I would believe that you should look to start nibbling into the stock price. Keep a staggered quantity approach where in case if the stock drops down further, say over the next 1 month to 3 months, that could be an additional zone where you may look to start accumulating as well as adding to your initial quantity for the stock.
All right, that's the view on Nalco. But time for a quick breather. Don't go anywhere. We'll keep taking your questions after the break, so stay tuned. Welcome back. You're watching Buy Now Sell Now, where we are taking you all your stock related queries, and you can write in your queries on the number that's flashing on the top of your screen, and we will get your questions answered by experts. Let's get started yet again then. Rajesh, coming to you. This is a question from Gautam, who's writing from Mumbai. He's saying that he wants to know whether Piramal Pharma and Glenmark Pharma, are they a good bet? Which is a better bet from a 12 to 18, I would say a 1 year perspective, which is a better bet, Piramal Pharma or Glenmark Pharma, is his question.
See, out of these two, if I have to select, I would go for Glenmark. Having a good portfolio of products, doing better than Piramal, although the numbers were not that good. But going forward with the kind of traction which we are witnessing in pharma space as such, I think Glenmark is going to outperform Piramal. So out of these two, I will go with Glenmark.
That's the take coming in on those pharma counters. Kunal, coming to you. Next query is coming in from a viewer, Sanjay, who's writing to us from Noida. The stock in question is Ola Electric. Now, he's bought 500 shares of Ola Electric at a price of 64.6 rupees per share. He wants a long-term view because he believes that the business is too big to fail. He wants to accumulate more, anywhere between 500 and 1,000 shares of Ola. As long as it stays between 60 to 80 rupees price band, he wants to keep accumulating over that price band. What do you think of his strategy? He's a long-term investor. He's asking for your advice.
So my, again, a stock which has limited history for Ola, but then my sense is that the stock has given a breakdown, and I think this has been a crucial breakdown for Ola on the charts, and that too on the recent time frame. I think closer to 67, 68 was the recent major support for the stock. It bounced off from this level in the month of November. From 67 levels, the stock had come back to 100 plus mark, and then recently also when the stock had come back towards 65, 66 as a support, it bounced back towards 80 levels. So this break of 67 is a very crucial break for Ola Electric. Now, I would sense that if the stock continues to trade below the 67 mark, say for another 3 to 4 trading sessions, that could lead to some bit of pressure emerging into the stock price. A best strategy for you, I would suggest, is that let the stock confirm a breakout, say in the next maybe few days, in the next 1 or 2 weeks, when it comes back above the 67 level. That could be a sign of confirmation that the stock may come back into a very strong bounce back mode. So I would suggest that just hold on to the stock as of now. 67 and above is where you should look to average or add further.
All right, that's a take on Ola Electric on the charts. But coming to you, Rajesh, this person is R.K. Ahuja, who's writing from Ambernath. He says that he has 250 shares of Zaggle prepaid at 430 rupees a share. He wants to know whether he should hold, add or sell it. His time frame is 2 to 3 years. If you look at Zaggle, Rajesh, this counter in the last 1 month, it has given up gains. It has, been under selling pressure of almost 40 odd percent. In fact, I remember after it posted quarter 3 result, the stock was down almost more than 10%. So what's the take coming on Zaggle? Should he hold it or should he average in? What's your take?
See, averaging is out of question. It would be sell and rise kind of strategy should be adopted into Zaggle if you want to hold. Otherwise, from my side, it's a sell, exit immediately because the fundamentals are not that good. It has run quite a lot during last bull run, and I don't think there are fundamentals that justify this kind of price even after this kind of cut. It's exit from my side.
Immediately is the cautious call coming in on Zaggle from Rajesh. Mr. Ahuja, we hope that answers your query. That's the call coming in, a sell call. Next query, Kunal, coming in from our viewer Gopal, who's writing to us from Warangal. He's asking if it's the right time to invest in RVNL and IRFC, both railway related counters. And this pack, rather the railway pack, has seen its own fair share of action, Kunal, over the last couple of months. Tell us what's the outlook going ahead.
This should not be the first stock which you should be looking to buy because these stocks are also very sharp, very high beta in terms of the price movement. Just about recently, for example, RVNL was a stock which had come back to 500, and in a matter of I think 2 weeks, 2.5 odd weeks, the stock has corrected from 500 to 300. So that's a swing of almost like a 35 to 40% for stock, and those are very sharp swings which you see into stock prices. Yes, at some point of time these stocks may start to look attractive, but then do you want, if in case the selling, from the FII's perspective as such, or the selling the market continues for maybe some more time, say another week or so, or another few weeks, then you might probably expect that these stocks may have more room on the downside. So it's always better to wait out for these stocks to come back into a uptrending mode or a bounce back mode. That could be a point where you may look to start participating. Otherwise, you would be caught catching a falling knife into these names where these stocks may temporarily not form a bottom for themselves.
All right, so that's Kunal's view coming in on RVN and IRFC. But coming to you, Rajesh, another person who wants to know about the pharma pack, R. Ganesh from Bangalore, he writes that he wants to buy Dr. Reddy's and Aurobindo Pharma for long term. What's your take? I mean, both these pharma companies have a lot of exposure to the US, and with reciprocal tariffs kicking in, how does this bet look like to you right now?
See, there are concerns of reciprocal tariffs hanging on our head from when Mr. Trump took charge. But I don't think pharma would be that affected because of that, because as we all know that pharma is a big player in the US markets and European markets. So having said that, I think Dr. Reddy's and Aurobindo Bora are very good buys. They have good India filings. They have good product pipeline going forward, and the numbers have been quite good, especially Aurobindo Pharma. So I think one can buy both of them. Even one can consider Cipla at this point of time. So all these three pharma companies are a buy from our side for a medium to long term horizon.
Dr. Reddy's, Aurobindo Pharma looking good, and also can consider Cipla as the view coming in from Rajesh. In fact, the next query, Rajesh and Kunal, is coming for both of you, where our viewer has asked for a fundamental as well as a technical view. Kunal, we'll come to you first, followed by Rajesh. The stock in question is DLF, and our viewer SK Karan is asking for a combo view on what a good buying price would be, Kunal, and how are the fundamentals looking for the company going ahead. Rajesh, also given the fact that the recent Dahlias, the big sale coming in, one of the biggest residential projects that India has seen. Rajesh, on the fundamentals, tell us how this looks, but before that we'll go to Kunal for the technicals. Kunal, take it away.
So yeah, I think on DLF, again, a sector which had done fantastically well over the last 2 or 3 years consistently. I think real estate was one of the top performing, was the top performing or amongst the top 3 names in terms of performing sectors, which we've seen the last 3 years. DLF was one of the prime candidates of a major uptrend the stock had seen in the last 2-3 years. I remember, I think from 300 or 330 thereabouts, the stock had jumped up to almost 950, 970 plus mark. So after such kind of a very steep, sharp outperformance, you're seeing the first round where these stocks are going through a corrective phase. My belief is that these stocks may continue to drag for some more time. Difficult to give you a price point, but I would probably expect that gradually these stocks should cool off further by a margin of at least another 8 to 10%. So maybe closer to 600 could be a good starting point for you if you're a long-term investor.
All right, moving on from that to Rajesh, what would be your view? Because this person wanted your view as well on DLF besides the technical view.
See, the company has been doing very well. As you said, Dallas has been seeing good demand. The company is having cash of around 200 odd crores. This quarter numbers were very exciting, I would say. Bottom line went up by around 63 odd percent. Debt has been reduced, rather it's almost debt free, I would say. So everything goes in favor. The luxury demand is very high. The kind of fall which we have witnessed in the recent past is just because of market conditions. So this is an opportunity for long-term investors to accumulate. So depending on your time horizon, I would say keep your time horizon for maybe 12 to 18 months because the markets are in a wobbly mood at this point of time. One can accumulate DLF.
All right, that's the view coming in. It's a good stock to hold, DLF there. But coming to you, Rajesh, this person is writing, Mr. Reddy from Hyderabad. He says, is it the right time to buy Tube Investment India for a long-term perspective? Now, we also heard that Tube Investment was planning a 170 crore capacity expansion projects. Is this the right time to get into Tube Investments?
See, as far as investments are concerned, this is a pretty right time for almost every stocks which are fundamentally good, I would say, because with the kind of cut which we have witnessing in the recent past, despite the numbers being good, fundamentals being strong. So this is a pretty good time for investors. For traders, it's a different story. As far as tube investment is concerned, the company has been doing very well, belonging to the Murugappa group. They have a good corporate governance. They're moving into EV space with batteries and all. It's an opportunity. This kind of fall is an opportunity for long-term investors. It's a buy from a side.
Call on Tube Investment. That's the call coming in from Rajesh. Kunal, coming to you. Next query is coming in from our viewer Venu, who's a senior citizen from Chennai. It's an interesting query coming in because he's asked if the Nifty has made a quadruple bottom. Have things actually got so bad for the Nifty, Kunal?
No, I think quadruple bottom actually means that maybe the indices are holding on towards a key support level. So yeah, I think partially you may be right that 22,800 mark. We've been discussing this point over the last few days. That's a level for the index which the index has been holding on. But what matters is that after every retest towards a major support point, how strong is the bounce for the index? Like in the first attempt towards a retest of 22,800 mark, there was a bounce of almost 1,000 points. In the very recent one, there were two attempts for the index towards the 22,800 levels. The first bounce was almost like a 400-point bounce, and then followed by just about a 200-point bounce. So yes, the support is quite strong, but the bounces which are happening from that support point, that's dropping down in terms of the points, and I think that could be a concern for the markets, which means that if a certain level gets tested again and again with such kind of a sharp selling intensity or a liquidity withdrawal which is happening, there is generally an anticipation that the markets may go into a corrective phase, or that support level may break down. So yes, to answer it partially, yes, the 22,800 mark is a strong quadruple support, but whether the chances of the index holding on to that is pretty much on the higher side, I would suggest no.
All right, that's the view coming in on Nifty. But coming to you then, Rajesh, this is Nishi writing from Bangalore. Nishi says that she has 150 shares of Vedanta at 312 rupees, and now he wants to know that whether she should hold it or sell it. She has been holding Vedanta for the last 10 years now.
Strong metal play, I would say, and the kind of holding period you have said, one should continue to hold. There have been announcement of demerger and all, which is again going to unlock value. Metal demand is going up. The only problem is only dependent the metal pack as well, dependent on China news, which is not very good at this point of time. But for a long-term horizon, yes, it's a very good hold. A good dose of good dividend every quarter or so, and then there is a demerger story going on. It's a hold from our side.
Coming in on Vedanta. Kunal, next query coming for you. Our viewer Mahalakshmi is writing to us from Hyderabad. She says she's a housewife and a senior citizen and is holding 75 shares of ABB India at an average price of 5,780 rupees. She has started to accumulate this stock since 2022 from the price ranges between 3,200 and 8,250. So she's been a consistent buyer when it comes to ABB India. She's asking if she should continue her conviction on the stock, if she should continue to hold it, or time now to book the profit and exit.
So just continue to hold on to the stock. So there is nothing wrong with the company as such or the stock. Yes, even ABB is one of the few names from the infra pack as such which has gone through a sharp correction. But that's the overall gist and some substance of how the markets have performed in the last 3-4 months. But then stocks like ABB, they rarely get back into a phase where you see 40%, 50% kind of corrections. And whenever that has happened, at least historically over the last 10-15 years, those have actually become good opportunities for long-term investors and traders to try and nibble into the stock price. So since you're a long-term investor, my suggestion is to hold on. And if in case you're looking to add further, I think the next tranche of buying which you should be doing for ABB should be sub the 4750, 4700 mark for the stock, in case if it happens to come back to that kind of a price territory.
All right, well, with that, it's time for us to slip into a short break. We'll be right back with more questions on the other side. Stay tuned.
दस्तावेजों को ध्यान से पढ़ें.
Quality Power Electrical Equipments Limited, providing critical energy transition equipment and power technologies, serving domestic and global clients. Quality Power Electric Equipments now makes an initial public offering of equity shares, face value of rupees 10 each for cash at a premium. The 100% book built issue. being offered in a price band rupees 401 to rupees 425 per equity share. Opens on Friday, February 14, 2025. Closes on Tuesday, February 18, 2025. For risk factors and more details, refer to Red Herring Prospectus.
Presenting Kia Ceros, evolved by the future.
Kia, movement that inspires.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment,
Gratuity.
and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Think equity. Think मोतीलाल ओसवाल. भरोसे पे बनी विरासत. सपनों को बनाने हकीकत.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
अरे टेंशन किस बात की? सेंचुरी प्रोवोट का प्रीमियम प्लस है ना, लो एमिशन, हायर डेंसिटी, वाटर रेजिस्टेंट, टर्माइट एंड बोरर रेजिस्टेंट भी। यानी ये है जहाँ नो टेंशन वहाँ।
Premium Plus by Century Prowood.
वेरी ब्यूटीफुल। मेकअप वाला भी आता ही होगा। मेकअप ऐसा करवाना कि सब देखते रह जाएं।
भरोसा रखो मैडम, ऐसा मेकअप करूंगा कि सबके होश उड़ जाएंगे।
कहीं ऐसा ही कुछ आपके इन्वेस्टमेंट के साथ ना हो जाए। अपनाइए भरोसे की चॉइस और स्टॉक्स, म्यूचुअल फंड्स, आईपीओज में इन्वेस्ट कीजिए बिंदास। डाउनलोड चॉइस फिनेक्स टुडे। Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Any time is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold, and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hi there, welcome back to Buy Now Sell Now. Let's keep it going with all your queries, stock-specific queries to both our experts. Kunal, coming to you next. Our next query is coming in from Rohit, who's a long-term investor. He's bought 80 shares at an average price of 281 for Hudco and 80 shares at an average price of 286 for Geo Financial. He wants to downward average both today. Is that a favorable bet? Is that something you would recommend?
Well, for Hudco as well as for Geo Finance, I would suggest Hudco could be a better, stock where you may look at downward averaging or averaging at lower levels, because it looks like that the stock has come back into a deep oversold territory on the indicator front, especially on the monthly charts. Geo Finance, so the only concern is that the stock is limited history of the last 2 years or so, 2.5 odd years. And looking at the chart so far, it still looks like the stock has an impending correction, which could probably take the stock back towards maybe 210 or sub 210 levels, at least over the near term. So Hudco could be a much better bet if you're looking to average on the lower side.
All right, Hudco is a better bet. That's the word coming in from Kunal. But let me come to you, Rajesh. This is Sushila's writing from Bareilly. She wants to know, she holds JSW Infra. She is holding that stock at, she bought this at 219 and she has 886 shares of that. She wants to know whether she should hold it or she should exit at this point.
It's a strong buy from us side. A large infra playing on ports. They have recently acquired a good company, expanding capacity, cash positive, everything goes in favor of this company. It's a buy from a side. Somebody holding can continue to hold.
So stronghold coming in on JSW Infra, good conviction on that stock from Rajesh. Kunal, coming back to you, our viewer RG Rao is writing to us from Trichy. He's asking when he can start buying Alchem Labs and Deepak Nitrite. What's your view on both of these counters? What would be a good entry price?
So I think I would suggest that if you're looking to buy specifically Alchem Labs, first I would look out for maybe 5,300 as a breakout. This was the recent high for Alchem Labs, and the stock from that 5,300 levels fell towards 4,600 mark. The all-time high levels for the stock is around 6,400 mark. So even if you let go of maybe another 200-300 odd points and then buy closer to that 6,200, 300 levels, that could be a good zone where you may look to start at least expecting that the stock would probably form a major bottom for itself. Deepak Nitrite, on the other hand, I would actually believe that the stock has started a fresh leg on the downside in terms of a trend, because very recently we've seen the stock showing a gap down from 2180 levels on the upside and 2100 as a downside. This has been the gap for Deepak Nitrite. So generally what happens is after such kind of a gap down, move towards the 2180, 2200 levels would actually be taken as a point where the stock may come back into a sell on rallies mode. So wait out for a point where the stock confirms a sharp reversal of this gap down. That could be once the stock crosses levels of 2300.
All right, point taken, Kunal. Coming to you now, Rajesh. This is Samba Siva Rao, who's writing from Vijayawada. He says that he holds 320 shares of Macrotech Developers at an average price of 955 rupees. Now he wants to know that it has already corrected 30% from its 52-week high. He wants to know if he should start adding more at this juncture.
See, adding more at this juncture won't be advised because of various other issues rather than company fundamentals. The company is doing very well, good projects in hand. But at this point of time, there are better choices in the real estate space. I would say maybe a DLA or a cottage properties or a Shobha developer would be a better stocks to add at this point of time rather than adding a Microtech. You are holding it, continue to hold, but if you want to put new money, you can choose out of these three stocks.
Okay, so that's the take on from Rajesh on Macrotech. If you're holding, continue to hold, but if you're putting fresh money, those are the alternatives that he's given, the DLF, Godrej Properties, or perhaps a Soba. Coming back to you, Kunal, next viewer queries coming in from Karthik from Bangalore, who's writing to us. He wants to invest in Gabriel India for a time frame of 3 to 4 years. Could you suggest what an attractive buying price would be?
So yeah, you can look to start accumulating at current levels. The stock still looks to be relatively extremely strong with respect to its other peers, and even with respect to an absolute chart, the stock has done reasonably well. At least it's managed to shield for itself in the major part of the market correction. The strong supports for the stock is closer to 400, 420 as a support for Gabriel, and on the upside, I think just around the 500 mark, 510, 515 levels is where there is a lot of resistance. So good part is that the stock is placed just very close to that critical support of 400 plus level. So I think the risk reward is attractive for you to look to start buying at current levels.
All right, on that note, Kunal and Rajesh, thank you so much for taking the time out and joining us. With that, we're completely timed out in this edition of Buy Now Sell Now. Sneha and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues.